So, hi guys, this is SJ speaking, and in today's video, we're going to see about what is statutory liquidity ratio, so SLR. So, SLR is also one of the monetary policy instruments used by RBI for maintaining the liquidity and solvency, also for controlling the money supply in a nation's economy. So, let's see about this SLR. So, before going to the video, I'm personally teaching trading. So, if you want to learn trading from me, you can contact me personally from the number which I've given in the scrolling below on my video. So, I'm taking 7 courses which consist of technical and fundamental analysis and also master strategy, which is also another form of technical analysis. So, it is also given separately in one course and also combined. So, totally there are 7 courses. If you are interested, you can enroll in any one of the 7 courses. So, now let's go into the video. So first, let's see about what is statutory liquidity ratio, that is SLR. So, what is statutory? Statutory means so it is mandatory and mandatorily and legally required. Mandatorily means compulsorily and legally it's required. So that is what the meaning of statutory means. So liquidity means there is a, I will say what is the meaning of liquidity and solvency. So liquidity means, suppose if I am going to a shop and I need to and I must have money in my hand. I should have cash in my hand to purchase the product that I want from the shop. So if I have the cash in hand, it is known as I am having liquidity. If I don't have the cash in hand, I am not having liquidity. But I am having cash in my house or in my bank account. So I can return to my house and take the cash from my house, and then again and I go and I can buy the product. So this is solvency. I'm not having liquidity, but I am solvent. I'm having money in my house. But if I am insolvent, means I do not have cash at all. I do not have cash in my hand, which is and I also don't have cash at my house, and I also don't have cash at my bank account. So this is what known as insolvent. So this is the difference between solvency and liquidity. Liquidity means currently whether I'm having cash in my hand or not. So solvency means whether I'm having cash. If even if I don't have in my hand, at least whether I'm having it in my house or some other somewhere else I'm having. So that was solvency. So so this is the basic meaning of liquidity and solvency. So let's come into what is SLR. So statutory liquidity ratio means it is the minimum amount of deposits that the commercial bank has to maintain in the form of liquid assets in their own bank itself. So before providing credit to the customers. So in my previous video, I have said about the cash reserve ratio, that is CRR. So in that, some amount has to be maintained in cash in the RBI. But here, it can be maintained in the form of liquid assets. So liquid assets can include cash or precious metals such as gold or any form of government securities or bonds. So, so that is what the meaning of liquid assets. And these don't need to be maintained in RBI. It can be maintained in our own bank itself. So, in the own bank itself, it can be maintained in the form of liquid assets before providing credit to the customers. So you might wonder, the bank always follow the fractional banking system. So fractional banking means if the government has around 100 crore means some percentage must be kept with the RBI as reserves. That is what CRR. So suppose CRR is 4 percentage means and SLR is 18 percentage means. So totally 22 percentage has to be maintained with RBI and even in our own bank itself in the form of liquid assets. This means fully cash. And then the remaining amount only can be given to the so 78 crores only can be lended. The remaining 22 crores can't be lended. They have to be maintained as CRR and SLR. So this is what fractional banking system means. So because every money, if it's lended to the customers means, suppose if someone suddenly comes for withdrawal, there is no bank money in the bank for giving to the customer. So in order to avoid this liquidity problem, so bank brought this CRR and SLR. So in this video, we are seeing about the CRR. So this 100 crore is the net demand and time liabilities. From the net demand and time liabilities, we have to take in a small portion. So the definition, so SLR is defined as the ratio of the bank's liquid assets to the bank's demand and time net demand and time liabilities, NDTL. So SLR is equal to liquid assets divided by NDTL into 100. So since we are calculating it in percentage, that is why into 100. So liquid assets include cash, metals such as gold and government securities. So SLR is one of the monetary policy instruments used by the RBI to maintain the liquidity and solvency of the bank and also for controlling the money supply of the country. So controlling the money supply of the country. Suppose if I increase the SLR means the money supply can be reduced since most of the money has to be deposited in the bank itself. So the lending money decreases. So amount of lending given to the customers decreases. So if the customers borrowing becomes less, then if the customers can't borrow money, they can't buy anything. So the purchasing power reduces and the demand for the products and services automatically comes down, and therefore inflation is reduced. So inflation is reduced. Suppose if the RBI reduces the inflation rate means we can increase the money supply. If the RBI wants to increase the money supply. So in the case of deflation, if deflation occurs, in order to bring the economy, in order to boost the economy, in order to increase the money supply, the SLR is reduced. So once the SLR is reduced, more lending can be is available for the borrowers. So more money is borrowed, and the borrowed money is used for purchasing some things, and the demand for the products and service increases. Automatically, the prices starts to increase. So the money supply starts to increase. So this is in case of deflation. So this is how the money supply is controlled. Also, SLR is used to control the base rate. So base rate means it is the basic lending rate. So it is the minimum amount of rate that is below which the banks can't lend to the customers. So minimum rate below which banks can't lend to the customers. That is known as the base rate. So if there is any change in the SLR, it is also affecting the base rate. So you have to take into account. So now let's come into the calculation. So, so what is the difference between CRR and SLR means before going to that? So CRR, if it is maintained in the RBI does not pay interest. But here in SLR, we are having some investments in government securities, and these government securities give some income to us in the form of interest. So this is the benefit in terms of this is the difference between CRR and SLR. In CRR, you get no interest at all, whereas in SLR you get some interest. So these, if someone comes for withdrawal, these liquid assets can be easily converted into cash and they can be given to the customers if they come for immediate withdrawal means. So suppose if there is no cash in the bank for giving means these assets can be converted and can be given. So this is one thing. So let's go for the calculation. Suppose if the RBI determines the SLR as 18% means, so the formula is SLR is equal to liquid assets divided by NDTL into 100. So SLR is already 18%. So 18 is equal to how much liquid assets we have to maintain in the bank in order to find out that. So total net and demand liabilities, for example, 1000 crore means into 100. So we can cancel this and cross multiply here. So 180 crores we have to be maintained as liquid assets in the form of cash. So 60 crores as cash, 60 crores as investments in gold, and 60 crores as investment in government securities. So this gives some interest. So this also appreciates in value. So we have to take into note of that. So what is net demand and time liabilities? I have explained. I'll bring a separate video regarding this, but I will also explain in this. So net demand and time liabilities means it's nothing but the demand and time deposits. So savings account, current account, and FD and RD. So these deposits, total deposits plus we are having deposits in other banks, and other banks have deposit in our other banks. So if other banks have deposit in our bank, so it is liability for us. So bank liabilities. So that also has to be added. So suppose so bank, if we are having some deposit in other banks, mean that is assets. We have to minus from that. So totally this is the net demand and time liabilities. Savings account, current account deposits, FD and RD deposits plus other bank deposits with us minus our deposits in other banks. That is known as our assets. So if suppose take it as 1000 crore means, then the calculation I put it as so 180 crores must be maintained as liquid assets. So previous calculation that I have explained you in an example. So take that means, so 180 crores have to be maintained in the form of liquid assets. So this is the SLR. So so that's about this SLR. So totally you would have got a good clarification about what is SLR and the difference between CRR and SLR, and what is liquid assets, what is NDTL, how to calculate SLR. So definition of SLR and what are the liquid assets, and what are the significance of SLR. So hope you guys got a good clarification, and if you enjoyed the video, give a thumbs up. So like and share with your friends and family, and subscribe to my channel. Also press the bell icon so you get notified for all my videos. And apart from that, You can also comment on my videos. It will be a feedback and motivation for me. Other than that, if you want to learn trading from me, you can contact me from the number below. 7 courses. So you can enroll in any one of the 7 courses, which consists of technical analysis, fundamental analysis, so separately and also combined together. And of course, if you want to open a Demat or trading account, I have given you Zerodha Blue link on my video description on all my YouTube videos. So you can open an online Demat account and start trading or investing from today onwards. So hope you guys enjoyed this video. I will visit you on my next video. Until then, bye bye. Take care.